Okay, just let people to come in. Released on last Friday, 26th of March, on digital payment token providers. So I think this is a topic today. While no doubt we actually have the time set at 1.5 hours for this particular webinar, we are also increasing it to another half an hour because I'm very sure that a lot of questions is going to come up. So in total, we can expect up to 2 hours. So feel welcome to stay on to ask the questions you need. This is not just a webinar where we talk and people listen and then you go home. This is a webinar where we want to collect feedback from the industry for BAS with the regulatory as well as the DEX subcommittees to actually come up with a good response, an official response from BAS, reflecting the sentiments of everyone over here as well as the expert community, to be submitted to FATF to tell them this is what we feel it should be like. So this is not something that FATF going to submit something like this and we're going to take it lying down. No, we are going to respond back professionally our thoughts and feedback on this matter. So feel free to give your comments and your feedback and ask your questions, because we will record everything down, compile, analyze it, and then submit to FATF. This also includes potentially responses that are directed to MAS. We will then compile them and then respond to MAS accordingly. Now, without further ado, I shall start today's seminar. shall hand over to Nizam. Nizam, over to you.
Thanks very much, Kevin. Good afternoon, everyone, and thanks for joining us. Let me just share my screen. Okay, can everybody see this? Okay, wonderful.
Yep.
So we're here today to talk about a very important development, which is the FATF consultation paper, where it effectively introduces new guidelines or recommendations for AML and CFT that affects the blockchain and crypto community. It's not just the exchanges, but I think as you will later see, the proposal actually extends the AML requirements across a broader spectrum of players within the ecosystem. And so that's the first part of this webinar. The second part, actually, we'll probably take a longer time on the first part. On the second part is to reiterate some of the MAS articulation on their expectations for AML and CFT controls for digital payment token service providers. So first of all, let me introduce you to the very handsome panel. So Kevin, our webinar host, is from Legatus Pay. We've got Azman, Hamid, who looks after legal and compliance in Upbit, Chaikit from Synopsys Solutions, the rockstar, Branson from ECXX, who a crypto exchange that recently got into the MAS Sandbox Express. So congratulations. Ian from Merkle Science, and he does wonderful things in terms of screening wallets, and I think Ian's domain knowledge will be very relevant for today's discussion. And myself, Nizam Ismail. So let's kick off, and I think we want to make it as interactive as possible. You'll know that we'll have all these poll questions. So just to get a sense of who you are and why you're interested in today's afternoon session, apart from maybe meeting us virtually. Some of us have got fanboys and fangirls. So Kevin, can we run the first poll?
Sure. Jiahui, please start the poll. Thank you.
Okay. So this is just to get a sense of, tell us about yourself. Are you a DPT services platform or other payments platform? Or are you a token issuer, a potential token issuer? Because we know that right now there's quite a bit of interest in token issuance, or you're in this others box.
Okay, we shall give you some time to think about it and just probably add on. Yep. Some of you could be even double profile as well, right? Could be both a services platform and also a token issue as well. So, yep.
Yeah. It says that hosts and panelists can't vote, so this is really your vote.
So fan club falls under others.
I would think so, Shaikat, yeah.
I would think so.
Okay.
Okay. 5, 4, 3, 2, 1. Okay, Jiahui can stop and share the results. Yep.
You see that we are overrepresented by Chai Kids fan club, but quite a few DPT services platform, 22 of you all. other payment platforms 16, and quite a sizable number of token issuers 10. So that's really great. So all very interested constituents. So let's jump into this. So a bit of 101. If you all have to ask this question, who is the FATF? You are not likely to be, in this webinar. So everybody knows that the FATF sets global standards for AML and CFT. They strike fear in the hearts of regulators, including the MAS. Okay, know that. Okay, let's move on. Just to, so this is a bit of a history. The FATF in June 2019 introduced a set of guidelines, they call it guidance for a risk-based approach for virtual assets. So just to get some, terminologies out of the virtual assets are cryptos, and VASPs are virtual asset service providers. So these are your intermediaries like your exchanges, your dealing platforms, and other intermediaries as well. We will talk about the scope of VASPS being widened. So this is the actual document that was originally issued. There was a 12-month review by the FATF that was completed last year in June 2020. So very efficient. There was also a red flags report or indicator report by the FATF issued in September 2020. You would recall that we actually had a webinar on this organized by the Blockchain Association. Essentially, the FATF indicated some trends or some typologies that they observed in relation to the use of cryptos for money laundering. And here we are today. This is the March 2021 public consult. So, you can see that everything is moving very, very efficiently, right? From middle of 2019, the one-year report in 2020, and, barely 9 months after that, we've got a consult on enhancing or improving or widening the scope, or some of us might feel there's over prescriptions when it comes to AML and CFT expectations on VAs and VASPS. So that's where we are. And this is what we are here to do. Now, it's 96 pages of guidance in the FATF document. It's okay if you've not read it all. We're here to do the reading for you. And we're going to distill some of the key points. So it's a little bit messy, to be honest, because they didn't have a consultation document. What they did was to take the original guidance and to put in amendments as what they see fit onto the original guidance. So we actually had to distill what the changes are. So, but we're going to do that all for you today. So just a bit of 101 again. Why does it all matter to you? Why does the FATF matter to all of us? And that's really because invariably the FATF recommendations trickle down to MAS as a regulator, and it trickles down to the MAS notices, whether it's PSNO2 for you or MAS 626 for a bank that deals with you. And so there is a definite nexus. So the FATF does this very well because, can someone mute the microphone, please? I think we can hear. So they does this very well through a mutual evaluation exercise where they come down and inspect individual jurisdictions, including Singapore, to ensure compliance with the FATF standards, right? So that's just to get that out of the way. A bit of recap before we jump into the consultation paper. This was the findings by the FATF on the use of cryptos in connection with money laundering. So what the FATF found was that there is evidence that cryptos have been used in relation to nasty things like sale of controlled substances, that's drugs, or illegal items such as firearms, fraud, tax evasion, computer crimes, child exploitation, human trafficking, sanctions evasion, terrorist financing. The most common category of misuse is actually on drugs. Second most common category, fraud, scams, ransomware, extortion. I think maybe Ian can also share his experience with Merkle Science later on. Okay, here are the key areas of concern set up by the FATF in their consult. So we distilled this from the consultation paper. First is on the treatment of stable coins. Next, peer-to-peer transactions. This seems to be a bad word. I mean, to put it quite bluntly, there's a lot of burden on AML and CFT on VASPs dealing with P2P transactions. And of course, some of you here, especially those are in the DeFi space or considering token issuances, this might be relevant for you. The next area is risk factors on virtual assets. In other words, if you are a crypto, let's say you're a crypto exchange, how do you conduct a risk assessment on cryptocurrencies? Or even if you're a bank for that matter, how do you conduct a risk, a risk assessment on VAs? There's quite a bit more prescriptions. Some of these give more detail, but I think some of the risk factors might be problematic, so we can discuss that. Next, risk factors on VASPs, on other crypto intermediaries. Again, there are some areas which might pose practical issues or problems, so we're going to discuss it in a bit. Next, the FATF's expansive view. In other words, they take the view that we are going to take a very wide view of what is a VASP or what is a VA, and make sure that everybody is in the regulatory drift net. So we can discuss that as well. And lastly, the travel rule. The travel rule is not something that's curtailed because of COVID and you can't go to the airport. It's about information sharing on cryptocurrencies. Especially if you're an intermediary, you will, just to recap, the MAS has introduced its travel rule, but we do know that the MAS is also rethinking its approach on the travel rule in light of the FATF paper. So there's a bit of an on-hold thing, and there's some teething and practical issues around the travel rule. I think we discussed this last year by the BAS as well. So that's the key area of focus. So let's jump in into stablecoins. Now, stablecoins, it's quite funny that the FATF they don't just say stablecoins, they say it's so-called stablecoins, right? So in other words, the stability is questionable, at least from the FATF's point of view. But let's just call them stablecoins for our purposes. Essentially, the principle is they want to include stablecoins as part of the whole universe that are subject to AMLCFT controls, to put it quite simply. So they're concerned, the FATF, that there is a mass adoption possibility of stablecoins. I think if you look at some of the stable coins that we have right now, I think that's very true. It is quite used extensively. And then the FATF distinguishes between centralized stable coins. And they say for centralized stable coins, and this could include CBDCs, they're likely to be covered by FATF standards. So whether you're an FI or you're another VASP, you're caught under the existing rules. But they've distinguished decentralized stablecoins, and they say that decentralized stablecoins can potentially carry greater AML risks, particularly if you don't have an identifiable developer or a governance body. Okay, I'm going to open to the panels to immediately get your thoughts. Remember that fundamentally stablecoins already fall under the PSA, as the MAS has issued a couple of consultation papers, both as e-money and DPT. That's the default position of the MAS. And of course, if you're an intermediary, you are licensable. But any thoughts by the panel members on this? Yes, Chaikit.
I can go first. I think, I kind of agree with the need to make a separation, because I mean, I personally think that the term itself can be misleading, because stable coins suggest that it is stable, right? I mean, that's what it's intended to be, because it's pegged to typically a currency or existing fiat currency. So it may be abused by whoever who creates, new stable coins in the future, now or in the future, and that may then result in whether is it greater risk of money laundering, debatable, but perhaps there could be greater risk around investor protection. That is a separate thing that FATF clearly didn't want to address in this paper, because that's not within their ambit. Yeah. So I think that there is a necessity, from my perspective, to actually make a distinction. And I think there is a huge difference between CBTC, which is issued by central banks, respectively, versus a privately issued coin that is termed so-called stable coin. Because of the backing of the coin that exists, and if it goes down to being used by the mass market, the man in the street, then there is a greater concern whether would this stable coin be unstabilized. Should, let's say, the organization that creates it get into some kind of a fraud, scam, or any other thing, or get hacked, the large part of the reserve got stolen, then there's a whole host of problems.
Yeah,
Yeah.
I don't think the MAS is focused on those consumer protection issues. Remember, the focus is on AML and CFT.
No, I get. But what I'm trying to say is that, as with all things, whether it's financial services or pseudo financial services, or going to be, because it seems to me that the direction that they are moving towards, FATF in particular, is to try and align the existing framework on AML into whatever that currently exists today in a centralized world. That's their approach. And yes, I agree. And I think FATF also made clear that they are not looking at investor protection and all that. But all I'm trying to say is that preemptively, this will come in very soon in the future. It takes a few steps.
Okay. Azman?
Yeah, I wanted to just highlight about the fact that here in Singapore, the definition of stablecoin is construed as part of e-money, while under FATF clearly doesn't talk about thresholds and limits, while the application of e-money in Singapore has those connotation about stock and cap and flow. So I mean, clearly I think it's something that hopefully the MAS will take cognizant of the fact that stablecoin is part of the whole DPT or digital token universe. And that it shouldn't be obviously be subject to any sort of caps and limits. So that's one aspect of thing that I would like to highlight. The other is clearly the fact that stablecoin in itself has multiple ways of arriving at how they can become stable. One, it could be obviously 100% pegged to the currency, and that seems to be the approach that MAS has taken. Whilst we also know there are stable coins out there that are also made up of other kind of asset classes that forms part of that category. And there are others that talks about algorithm and the flow and demand of the particular token. So, I mean, I think this definition of stable coin itself merits a little bit more detail as to what it sort of falls between, because clearly CBDC is in the realm of currency and it's not part of virtual assets, but a stable coin that could potentially be 100% pegged to currency is in part what you call it, covered under virtual assets. So I mean there could be overlaps in some of these instances, and I just wanted to highlight that this potentially could be issue going forward.
So to summarize, your suggestion is some clarity on the scope of what is a stable coin.
Exactly.
And then
that would be my feedback because of
the 5K
how
and
it's applied.
30K limits. I think that's an MAS issue. I think we can manage it separately.
But I think we could
I
bear that in
agree
mind.
that those limits are restrictive. Yeah.
Sure. My comment on that particular, I think, is definitely on the DeFi part, because I think there's a lot of stable coins issued under DeFi projects that's kind of backed by the liquidity pool. And also, like what Asman said, right, it's actually backed by some algorithm and all that. Now, the question is that all of them are actually operating under unregulated, I think, regimes or instances. So how would then potentially FATF treats this? And would they then prescribe, regulations for, monitoring all these particular projects that actually uses a stablecoin in as DeFi projects as well? Increasing lots of that, right? And some of them are actually having very, very high market cap as well. So I think that's something that potentially FATF may really look into, and it will be, we need to have a clear signal, to see if it's fully regulated and to what extent for this.
I think FATF have already indicated that, right? That's why they clearly say so-called stable coins, and they clearly, from the slide here, they clearly make a distinction to say that potentially these decentralized stable coins carry greater risk because there's no identifiable developer or even governance body. So they have flagged this as a point that say MAS or any other regulators around the world will have to take into consideration as they write their own legislation.
Yeah, I kind of concur with Chai-Kit. I think it seems that the classification of the quote unquote so-called stablecoins means that the stablecoins itself should be left to the devices of the central banks or the jurisdictions involved rather than privately issued. I think that's the initial thought, at least on the FATF side. And at the same time, obviously, with the private money, so-called private stable coins being issued, then where do you draw the line between cross-border and whatnot? So I think that's the concern that they have here. Yeah.
Okay, I think let's we have a long way to go, so let's move on. But I think largely in Singapore, I think the impact is not going to be too material because they are already regulated under the PSA. So whether it's centralized or decentralized, technically it's still caught as e-money issuance or even account issuance.
Right.
Yeah, but I think there are some points that we can take back to the FATF on this. But let's move on to the next one, which is P2P transactions. Now, this is the one that you will find, this is going to be a recurring theme in this webinar. So a P2P transaction obviously is between two unhosted wallets. Okay, just a bit of technical term, unhosted means they are, they don't belong to a regulated entity. So currently there is a gap under the FATF recommendations, they are not caught. And then they made this statement in the FATF document, P2P could foreshadow a future without financial intermediaries. So must dramatize it a bit, as if that's a bad thing. But really philosophically, that's what this community is championing, right? This intermediation and to get everything done without intermediaries as far as possible. Now, this is the nub of the issue. So for P2P transactions, the FATF says that VASP, so that includes a crypto exchange, must consider the extent to which their customers engage in P2P transactions. So if I come to Azman in Upbit and say, I want to open an account, Azman has to ask me right now, Nizam, what's the extent that you are going to engage in P2P transactions? So that's the implication of this. And then the last point is that the FATF expects countries to consider how to mitigate these money laundering or terrorist financing risks arising from P2P transactions, for instance, through blockchain analytics. So maybe Ian can go to and do some pitching to MES immediately after this. Okay, so I'm going to open to the panelists again. Particularly the exchanges. So let's hear from Azman and Branson. Your thoughts. You both run exchanges. Does this mean that you need to revamp how you look at your customer onboarding, because you now have to ask them, do you deal in P2P transactions? Any thoughts?
Yeah, I think, Nizam. So I think for us right now, what we're doing essentially is to try to put in place this travel rule. But of course, we know that this is not easy. Obviously, there are multiple solutions out there, but none have been proven to be widely used or adopted. So it's more of a wait and see approach. But having said that, right now, I would say that if we were to ask for additional information, like, what other transactions have you done besides all this, I think it's a little bit onerous, to be honest. Because obviously, anyone would have transacted between unhosted wallets, right? So if I buy from this exchange, I would have transferred it to some other person, or I would have, transacted with another person, or transferred to our own wallets. So the question is how in-depth or how much information do you want to collect to the extent? So I think to me, it's a little bit tough for us to do all this. Yeah.
And if I may add, thanks, Branson. I would agree with the assessment that was made by Branson. In terms of the current travel rule, or in Singapore, we call it value transfer under the PSN 02, and the guidelines is very extensive. And we are also, coming to terms with how to comply with it. And this, would obviously throw another layer of complexity to the whole DD exercise by asking us to make a determination of whether or not, we are dealing with either hosted or unhosted wallet. And I think, I would love to hear later on what Merkle Science Ian have to say about this in terms of unhosted wallet, to what extent, because as far as I'm aware, reading through the publication, FATF themselves has admitted that they are not aware of anything technologically proven today of a means of identifying VASP that managed to screen beneficiary wallet exhaustively, precisely, and accurately. And those are their exact words. So if they themselves are not aware, and to throw this back to the VASPs, and I think you're creating another layer of complexity, because I think as is, we are facing a lot of challenges ahead, and I think this, if anything, should be deferred, because we today are not aware of the actual risks that I think FATF is just speculating about. Potentially unhosted wallet could be a very high risk activities if it grows in a larger scale. But today, I see that unhosted wallet between P2P as something as normal as buying goods and services, and in terms of the use of, similar to the use of cash, which is no different. So I think to add this layer of complexity would be overreaching and a little bit it's over prescriptive in my view, and we should basically provide that feedback to FATF on this.
Thanks, Asman and Branson. Just to add on to this, you don't find, in the cash world, technically a lot of cash transactions are P2P, right? So this is a case where, the blockchain community seems to be faulted because you have this ability to, track crypto movements through regulated, but you're effectively denying the use of or the movement of cryptocurrencies through unregulated entities. But like all currencies or digital currency, that's the nature of the beast, right? Money, whether virtual or fiat, are going to move from peer to peer, and you don't find a similar rule for fiat, right? So you don't see a requirement in MAS 626 to say that banks must decide whether cash is being used peer to peer, because cash is used peer to peer. So I think it's a bit anomalous. So this seems to be a higher burden for crypto players. But let's take those comments in. Let's move on.
Actually, can I weigh in on the P2P?
Sure, Ian.
So I think, from the FATF perspective, honestly, the whole concern around cryptocurrency is the fact that it can easily allow for cross-border transactions, which is why they say, you assume all crypto transactions to be cross-border in nature. And the moment you have this ability to move value cross-border, and without going through any intermediaries, it becomes a huge issue for the regulators, because these intermediaries are typically the one they impose these restrictions and regulations on, right? They require them to do AML checks, KYC checks. Now, what has me very concerned with this, and I do agree with Asman to a huge extent, that I think this is going a little bit too far, right? The whole point of cryptocurrency and blockchain was always to build this way to allow people to facilitate transactions without relying on intermediaries. And specifically, one thing that has me concerned is inside the consultation paper under 91, some of the measures that the FATF has proposed is going even so far to say denying licensing of VASP if they allow transactions from or to non-obliged entities, right?
Yeah,
So
we'll get to that, Ian. So let's.
Okay, I'm sorry if I'm jumping the gun a little bit. Okay, we'll circle back to that later on then.
Okay, but thank you for reading the paper. Okay, let's do a poll. Just to get a sense from the audience. So what do you guys think? So far it's a panel talking, but what do you think what do you think of the FATF's treatment of P2P platforms? Is it overstated or is it fair? So can we run the second poll?
After this poll, right, we will probably answer some of the questions. There's 3 questions related to the previous few slides. So I think this is a good time to stop after the poll and then probably answer those questions.
Yeah, I think there's seems to be a bit of confusion. So the first answer should be no, it's not overstated because they are risky. Second should be yes, I think ignore their risky part. So the third option is yes, they are overstated, but we should not thwart innovation. So which
Okay, I think 5, 4, 3, 2, 1. Okay, can close the poll and share the result. Okay.
Yes, they are overstated and we should not thwart innovation. Okay, that's
Okay.
very interesting.
So before we proceed to the next slide, should we just get the panelists to also answer the questions that's on the question list? There's 3 questions so that it covers, we don't fall back later on.
Sorry, I can't open the questions for some reason. Maybe you can read them.
Okay, so the first question is that has FATF provided hard evidence to show stable coins have been used for money laundering?
So, I mean, happy to answer that to the extent of my knowledge. So, no, I don't think there have been hard evidence to that effect. However, what I will say is that FATF has reached out to a couple of blockchain analytics companies to ask for us to provide assistance into research as to how, stable coins or even these DeFi projects, what kind of fund flows are going in and whether or not they are actually a target for money laundering purposes. So I think research is actively being done, but there is no hard evidence out yet.
Okay, cool. Second question is that through maybe open orders, this comment is saying that stablecoin is coming and gets pegged to the CBDC token since CBDC will often not be blockchain based. Yeah, so I think that's a comment to agree to the previous statement that was made. Last question is that does FATF address the use of cryptocurrency by state-sponsored terrorism compared against transnational terrorists? In other words, FATF should provide a calibrated approach distinguishing and identifying and also addressing both categories.
For the last one, I've not come across it unless some of the panel members have come across those sort of research.
No.
Okay.
Yeah.
Okay, I think we've got the answer. Thank you. So I think let's proceed.
All right, let's move on then, because we do have quite a bit to cover. So now we move on to the risk assessment of VAs or cryptocurrency. So the principle is this. So if you're an exchange, remember that you now need to assess whether or not to list certain cryptos on your exchange, right? So I think on the flip side of it, if you're doing trading, you might want to also risk assess whether you should be trading in certain cryptos. So in the Singapore context, typically you ask if the tokens are securities, whether they are DPTs, digital payment tokens, and you might also have some other questions, whether if they did a token issuance, whether they did AMLCFT. But now the FATF is prescribing some other measures. So one is the number and the value of VA transfers. You could probably get an estimate from that. Price volatility, you can probably measure that as well. Market cap, you can probably measure that as well. But this is where it gets a little bit problematic. A number of jurisdictions of users. So you now must say that for a particular coin, how many countries in the world have people who trade the coin? Okay, I don't know whether it's possible to get such data. And then you go into market share in each jurisdiction. So for one particular coin, let's say a Nizam coin, you now need to assess what is the market share of Nizam coin in Singapore, Malaysia, Indonesia, Philippines, Thailand, or whichever markets the coin is being traded. So that's another problematic area. Next, you must find out the extent to which the virtual currency is used for cross-border payments. Again, this might seem a little bit strange because the whole idea of cryptos is that they are supposed to go across borders. But how do you measure that? Again, question mark. Next, you are now also expected to assess the extent to which the cryptos are being swapped for fiat. And, so it's a bad thing from the FATF's point of view that cryptos are now being used to replace fiat currency in the traditional financial system. And lastly, whether they are open or closed loop. Now, so this obviously presents greater prescriptions for the exchanges and other intermediaries to do due diligence. So let's hear from, maybe let's start with Azman and Branson again. What's your reaction?
Yeah, so for me, I think the number of jurisdictions and the market share, I think that I'm talking about utility tokens here, not so much of Bitcoin and Ethereum, but for those specific projects or coins that are being issued by projects, it is possible to get, especially when you ask some of these ICO projects, who are the members or who are the investors or who are the users, where do they come from? I think they have a record of that. To the extent of the virtual asset being used for cross-border payments, I think that's a little bit tough. But but I think the last one is probably the toughest. You know, how much of it is being swapped for fiat? I think that's another, I guess, more record keeping. You know, and to the extent of, you know, how much are we, how much information are we supposed to collect anyway, right? Because all these things again will be added costs in terms of compliance for us. Yeah.
I think from my end, I would like to address this question from the perspective of the objective of this exercise versus the practicality of gathering those information. I mean, as far as we here in Singapore, we are really obliged to, you know, legally characterize each token that are listed, that we have to do some sort of a assessment in terms of its, you know, whether or not it's commercial viability and technologically innovative. So to some of this extent, some of this question clearly is obviously relevant to get to that level of scrutiny, whether or not a token should in fact be listed on a particular exchange. But I think some of those other questions, I think like things like market share and jurisdiction and the number of jurisdiction that is being used or cross-border type of use of that virtual asset. These are categories of information which I do not think today that we have access to those kind of information, nor are we able to comply or provide it to the particular regulators. So I'm very concerned about the over-prescriptive nature of this exercise, you know, and whether or not what kind of objective is it meeting in asking of those questions. So obviously it's something that I would like to, you know, provide feedback and in this consultation exercise to FATF.
Ian, from a RegTech perspective, Ian, is it possible to get some of these information?
So
market share.
There's ways that you can get indicators, but they're definitely not conclusive, right? So Branson provided one very good example. If you're looking at, let's say, a token that is newly issued, right? And then hopefully, you know, the issuer did KYC on the customers and so on, then you can say at that point of, you know, the first issuance, okay, maybe 20% of my buyers are from Singapore. And so, okay, 20% of the funds, the market share is in Singapore. But the problem with crypto is that, you know, once this has been issued, very quickly it starts listing on exchanges, right? And, you know, people start trading, buying it. And so it then starts moving between exchanges. And that's when it starts becoming tricky to monitor, right? Because as much as you might say that, okay, Singapore Exchange only service Singaporeans, the fact of the matter is it's not true, right? Most exchanges today serve a global clientele. So you can't even use an exchange as a good indicator of, you know, just because 20% of the funds sit with an exchange in Singapore, that there's a 20% market share in Singapore, right? Now, that's not to say that, you know, all this is not useful at all. Like I said, it can give regulators a kind of estimate, right? But certain assumptions must be made. And then the other question that you have then is that, you know, with cryptocurrency today, there are so many ways for you to move them that doesn't involve on-chain methods, right? There are off-chain ways of trading. A lot of these exchanges today, they aggregate and perform trades via API, where there's no actual movement of the crypto from one exchange to another exchange as well. So with all these ways of moving crypto that is not reflected on the blockchain, right, as well as the nature of how these exchanges operate, I think it's going to be very difficult for us to get accurate numbers for these statistics.
Can I just add my points on this part here? As with all things, right, as I said earlier on, FATF writes that guidelines for the whole world, right? So, and I would say that in the past where they wrote guidance and people may have criticized them as being too generic. And so for this new category of VA and VASP, they try to be, well, whether you call it relatable or relevant, they try to provide as much explanation as possible. And to be quite clear, they are not saying that all these factors have to be answered in a way that you can, you know, tell your regulator or whatever. You know, the regulator eventually may not require all of these and may require some and most or whatever. But I get the sense that, you know, where areas like, to Ian and Branson's point, some of this, once it gets into secondary trading, there's absolutely no way you can actually track this in a meaningful and sustainable manner, because it's just not their job, because you're running an exchange, you're not the CIA, right? If for what it's worth, I think they are trying to hurt the market into saying that if you are dealing with virtual asset that it's impossible for you to identify some of these risk factor, and therefore you cannot assess the risk, and therefore you are in a way herded towards not dealing with these tokens to begin with, and therefore the risk of money laundering inevitably will be reduced as a whole. Rather than to say I should prohibit it, because they want to be technology neutral, they don't want to say that it's outright wrong to do it. But they know that it may be risky, and therefore they list as many risk factors for you to consider, but you don't have to consider everything. But of course, at the end of the day, if you only consider, say for example, the top 3 bullet points here, then you have to justify to your regulator that why you only do 3 and you're not able to do the rest. I think that's the approach that they typically take. So people have to take into that into consideration. So I don't necessarily say that this is being overly prescriptive. This is them trying to be as complete as possible.
No, I beg to differ. I think there's a distinction between clarity and over-prescription, because, you know, going back to Azman's point, I'm not sure if some of these metrics are even remotely useful to determine AML risk. I mean, you don't need to, let's say, you don't expect, there's no similar expectation in the fiat world, let's put it that way. You don't expect, a money changer to ascertain whether a particular currency is used in different jurisdictions, right? And I don't know whether it helps, because, inherently, a cryptocurrency can be moved across borders. So whether it's being used in 1 or 100 jurisdictions, there's always an AML risk in that sense.
I agree. Sorry, Nizam, I agree, and not countering it. But all I'm trying to say is that I think earlier on you talk about fiat. I think we all know that today, vast majority of money laundering activities are carried out with fiat. I don't think anyone disputes that, right? It's all, quite publicly researched as well, whatever that is known. And I think what they are trying to do now is, with this new category of instrument called VA, they probably don't want to be in a position whereby the situation is repeated. Meaning that today, if in my own fiat wallet, I give you $50 note, it's not, nobody needs to track that, right? For unhosted wallet to unhosted wallet, now they are saying that maybe you need to think a little bit about it, which is why they do not want a repeat of the outcome today, that they have been dealing with fiat for the longest time, and they have no way to get rid of it. And therefore, they do not want VA to fall into that situation in 5 years' time if it's left to its own devices.
Yeah, if what you say is correct, Chaikit, then are we then expected to police how a person spends his money? Isn't there such a thing as privacy and personal to the person, how I spend and choose not to provide the information?
No,
I'm saying
it's
when
not.
you go down
not.
to the nth degree, and
No.
you are trying to get all this information, how users, consumers utilize their VA virtual asset and where do they spend it to? Clearly you are tracking every aspect of the spending, and then I'm questioning, what about the person's personal privacy right?
No, I hear that,
balance.
but I think none of this risk factor that is listed here in this slide is talking about expecting the VASP to drill down into the very Ether or Bitcoin that you're spending on. They're expecting you to consider this risk aspect of it. They're not asking you to drill down into the accuracy and the exact amount of VA that you are using. As long as it's being traded through your platform, they expect some knowledge and some element of ability for you to understand what it is for.
I think my concern as an exchange is, once you put this up there, some degree of whether to what extent, and we can debate that to the nth degree, the question is then we still have to consider and assess. And to me, that's already overly prescriptive.
Oh, okay.
So
I mean,
then
then it's just a difference. It's just a difference in understanding and of what risk assessment actually means for each of us.
Yeah.
I think it depends on how these factors eventually gets translated to local regulations, of course, whether it's either or it's n. So we don't know how it's going to come out, but I think the point is now is a chance for us to give feedback. If we think that some of these considerations are not helpful, then we should say it, I think. But let's move on, because we're not even halfway through, and we're already 50 minutes down. So these are the other additional factors that the FATF has said, which seems a little bit more reasonable, I think, or not out of character. For instance, value of VA transfers relating to illicit transactions, whether darknet, ransomware, or hacking. I think a lot of wallet screening solutions do that right now. A use of anonymizing or de-anonymizing techniques, mixing, tumbling, clustering of addresses, exposure to IP anonymizers, the Onion, Invisible Internet Project, other darknets, size of the business, existing customer base. I'm not sure whether this is readily available, but what do the panel think? Panel members think? Are these factors okay, or are they still problematic?
These are slightly more relatable, because I think this is what most of the I guess the Merkle Science of the world are doing. So I think we have been working very closely with Merkle Science anyway to identify all this. So I think this is okay, right? Because we can identify those based on whatever tagging that those service providers are doing right now. Yeah.
Also, there seems to be a greater nexus to bad behavior, right? Because the use in illicit transactions. But then again, I mean, it could be a function of the popularity of the coin. Like, for instance, I'm sure BTC will stand out because it's just the most popular crypto out there.
I think, Nizam, is also the wallet addresses themselves. In terms of now with the travel rule, they made it very clear that parties need to do your assessment and mandated to do the screening of not only the identity or the originator, but also the wallet addresses, right? So because of that, then it clearly becomes something that's, I think, relatable, that you need to assess whether or not clearly any of those wallet addresses is tainted by any of these value transfers from, or indirectly or indirectly from the darknet and the ransomware and so on and so forth. So it's what I'm trying to say is here, obviously, something that is relevant, and then something that we are expected to do, and something that I think the whole industry as a whole is working with the Merkle Sciences of the world to try and capture this within our risk assessment as well.
And just to share a little bit more, I think when we look at, let's say with any given token, how many % of it is linked to darknet, ransomware, and hacking, for an exchange looking to onboard a token, I think, to be clear, this is not a burden that the exchange actually has to bear themselves, right? We do work with projects themselves directly, projects who, even after selling the token to their customers, still want to monitor how many addresses in their network that hold their token are linked to these different activities. Right, so exchanges looking to onboard these tokens, you can actually request for this information from the projects, right? If you're working directly with them, assuming that they have organization that's governing it, right?
Okay, thanks, guys. Let's move on. And now we move on to a slightly different area, and this is the risk factors relating to a VASPs. And so this is moving away from cryptos, but on the exchanges and the other intermediaries. So here are some of the risk factors. So I imagine that these would be factors relevant for exchange to see whether it wants to deal with another exchange, or for a financial institution like a bank, whether it wants to deal with an exchange, for instance. And it will be areas such as number of type of VASPs in a jurisdictions offering to consumers, transaction amounts, sophistications of the AMLCFT program, so that's quite commonplace. That's something we already do. Size and type of customer base of the VASPs, whether it's on its own or if there's aggregation across platforms. Nature and scope of the, your account, product, or service. And the FATF says this. It says, for example, small value savings and storage account that enable financially excluded customers. So, okay, we can talk about this, but they seem to suggest that they don't like, exchange that serves the interests of the smaller players, people who are financially excluded. So I find it a little bit troubling. And the other point I think is also new, measures by the VASPs to risk manage. So whether they put in limits, I assume that would also include like hot and cold wallet splits, for instance. So yeah, can I just open up to the panel? Your thoughts on this? Whether these seems fair or this seems a little bit strange. Anyone? Osman?
Well, if I may go, okay, sorry. Yeah, I think basically some level of DD or due diligence is expected when we are, trying to exchange, obviously, personal data of the client across to the other party. So we need to know whether, the person receiving it are obviously counterparties that you can consider eligible counterparties. Whether or not they are licensed, whether or not they have sufficient, they conduct their own proper KYC, and then also so on and so forth, basically. But I think one of the issues here is the extent in which the FATF is expecting of the DD that to be conducted. And I think they made some recommendation. So my concern is the extent of that DD that is being asked. So they are suggesting complying with measures or standards like the Wolfberg questionnaire, which are very extensive due diligence assessment on such counterparties. And they even recommended the guidance to the correspondent banking, although we are dealing on a very direct exposure to the other party and not through a correspondent banking or intermediary as such. So it's very interesting that FATF is asking all of these very exhaustive requirements and placing that burden squarely on the shoulders of the VASPs, because I think that it will only create another layer and complexity, obviously increases the cost of compliance, because at the end of the day, if we are dealing with a regulated or licensed entity, shouldn't we sufficiently comply or rely upon the license itself to evidence the fact that the particular service provider is regulated, is complying with AML and KYC. So that's one aspect. The second aspect that I think is also problematic is in dealing with some of this due diligence in other countries, there's issues of privacy rules. I mean, when you think about GDPR, which today I think a lot of the European countries haven't adapted some of these FATF rules or travel rules, then how do you expect to comply with that and at the same time comply with GDPR? Because you'll be typically in breach if you were to transfer without the legal basis under GDPR. So there's a number of problematic issues when you're dealing with this kind of assessment, which I think hasn't really been fleshed out. But I obviously certainly would like to, to provide those feedbacks to the FATF group.
Yeah, just thanks for that. I think just to explain to the audience, a Wolfsberg questionnaire, I mean, it comes from the Wolfsberg committee. Essentially, for the banks, when they deal with other banks, they send a questionnaire asking questions like, do you have AML and CFT compliance? Do you have ongoing monitoring? Do you do risk bucketing? So, it runs to a few pages. I think for the crypto community, I think some of the exchanges have started doing that because you need to find out how good the AML controls is. But it does appear from the FATF recommendation that one additional question that you need to ask is the extent to which the other exchange risk managers, whether they put limits on cryptos. Not so sure whether that necessarily is very helpful when it comes to AML and CFT risk. Branson?
Yeah, Nizam, I agree with Azman as well, because to me it's I mean, if you are dealing with a regulated entity, I think that's one thing. But it's another thing to go into the extent of understanding whether this jurisdiction is so-called quote-unquote regulated enough so that you can deal with the corresponding VAS on the other end. So I think that's a little bit tough for the VAS to decide if there's such a thing, right? And the second thing that you mentioned earlier is the exclusion of the small value savings and storage account. I think this is a little bit concerning, to say the least. Yeah.
Sorry, Nizam, can I just add my thoughts on
Please do.
the cross-border thing? I think taking a step back, regulatory arbitrage is always a problem in the real world in past, and it continues to be a problem. And whether in the virtual world or in the real world. So and FATF also recognizes in this paper that there's always going to be differential in terms of the stages of each jurisdiction's progress in terms of their respective legislation in this regard. So I guess for people in Singapore, there is also described in the paper where in the sunrise situation a little bit, maybe this will be addressed later on, but because we are a bit ahead of the curve, then FATF is also concerned that, and they also made it quite clear that, you know, for example, in some jurisdiction, I won't know which one, but for example, jurisdiction A, you know, if you regulate in a very loose fashion, like self-regulatory body is not considered competent regulator. So that needs to take some time for everyone to come up to speed, right? So yes, it's a problem for existing people who are ahead of the curve to try to address the other counterparty there, and how much, what is the standard that they have, whether, you know, to Asman's point, whether that breaches GDPR. I think that's a concern, but I generally think if you are compliant with a regulation, then GDPR should not be a big issue because there's exemptions around that. Okay, but it's a good point to raise this, and just for this purpose of this conversation, that a couple of years ago when I attended the FATF conference, I raised the point that whilst you want to regulate VASP, you need to take into consideration competing regulations around data privacy, right? Which is a big problem because they counter each other, AML and data privacy. So the harmonization of data privacy laws across the world is probably more crucial, and as well as you know, coming in with an AML requirement on a certain sector. So yes, this should be reiterated back to FATF.
I think in terms of that point about GDPR, and we've checked with the European EU lawyers in terms of that position, and clearly they've said that it will be a breach because it doesn't provide sufficient legal basis. You need to assess whether or not there's a legitimate legal basis in terms of that assessment, and if there are no laws, there's nothing express consent, then clearly it becomes an issue. But anyway, so it's something that we need to feed back.
I think it's interesting for the audience, right? Because if we take this a little bit, 1 minute more, which is basically to say that if in Singapore there is a requirement, legal or regulatory requirement for you, for example, VSP, to provide that information to the other counterparty, leaving the assessment of whether they are good enough to receive it aside, would you be in breach because there is already a legal regulation here for travel rule to be implemented, for example? So your ability to your obligation to provide is at the back of a regulatory obligation.
I think I mean that's essentially MAS's problem.
Yeah,
they should make exclusions, but that is a good point, important point. But I think the regulators, that's something for the regulators to have to deal with.
Address.
Correct.
So let's move on, guys, because we've still have some way to go. Why is this thing not moving? So moving on to the risk factors relating to VASPs, there are also other considerations. This is a continuation. So you need to assess whether the business model fundamentally introduces or worsens risk. I'm not sure. I mean, for an exchange, does it help reduce or worsen risk? So I don't know whether the VASP operates online or in person. And again, this is a fairness issue, right? For traditional financial services, most of the businesses are done, except for the fintech guys, but most of it is done in person. So why is that a bad thing? Potential money laundering and sanctions risk associated with the VASP's connections and linked to the jurisdiction. I think we discussed this just a minute ago. Whether the VASP implements a travel rule, and this is when it gets back to the P2P point, whether the VASP has transactions with non-obliged entities, unhosted wallets, or transactions where P2P transaction has occurred earlier. Whether you have mixers or tumblers, those are bad things, and how you interact and manage smart contracts. So your thoughts on this? particularly on the P2P areas, does it cause problems? Branson, any thoughts?
Yeah, I think it's what we discussed earlier, right? So the collection of data, to be honest, is a little bit tough. I think right now, to collect how many transactions this person has with with other unhosted wallets, I think that's very tough, to say the least. But we have tried, instituting something like a digital signature. So what we tell the person to do is that if you want to withdraw to an unhosted wallet, then you have to prove that this unhosted wallet is actually owned by yourself, right? And that, to be honest, has caused a little bit of an issue for some of our support teams. So yeah, just to say the least. So I think we are still grappling with this fact that most people at the end of the day will have an unhosted wallet and subsequently transfer to another unhosted wallet. So I think again, this is the the devil is in the details, so to speak, right? How do you collect all this data and even to prove that they own the data itself? I mean, to own the unhosted wallet. Yeah.
Yeah, I think I agree with those points, Branson. But also, I would just like to add that I think it ups the game in terms of the KYC and onboarding process that FATF is expecting of the VASPs. In terms of collecting the information, you need to determine and distinguish between whether or not the person is a non-obliged entity or individual who's not operating a business. And therefore, clearly falls under an hosted wallet. So, I mean, these are additional layers of detail that clearly they're expecting the VSP to collect. And in addition to obviously all of the other requirements under the current regime. So yeah, I think it would be a bit of a challenge to put this into place. And I think it probably needs time if it's something that the local authorities deem it as a requirement as well.
And to add, I think we also need to feedback like the reality of it is that if someone were to launder money through unhosted wallet, and nobody's going to use a tainted unhosted wallet to begin with, so it's always going to be very clean, which means that it's a chasing after your own tail, because you're not going to get any outcome of it, and nobody's going to tell you that this unhosted wallet have dealt with ransomware activities before. Yes, Azman, please, high risk me. So and also, even if you assume that everybody's going to do the right thing, then the question for VSP is how far back do you need to look? How many hops do you need to jump? Which perhaps some kind of a clarity. But again, it's one of those things, damn if you do, damn if you don't. Be careful what you ask for, because if you ask for clarity, then if they set out to say, okay, you need to jump 5 hops up, then you are late. Or you need to go 10 levels up. So I'm not quite sure how to phrase that question though.
Yeah.
Branson, you wanted to say something else?
No, I say, yeah, that's precisely the point, which is, how many hops do you have to then look at? Yeah, I mean, totally agree with Chai Kit.
The reality is that nobody's going to use a tainted wallet for any purpose, because they know this is a public consult. If I'm a money launderer, I read this as well. So,
let's hear from Merkel Science. Ian, I mean, your thoughts on how many hops?
Yeah, so I mean, there's no right answer to that, right? So actually a question that we get very often from both the public and private sector, how many hops? And I mean, regulators are hesitant, right? If they come out and tell the industry, oh, we expect you to do 3, bad actors know, oh, if I do 5, I think I'm pretty safe, because, all these guys are just going to do 3. And to what Chai Kit said as well, he makes a very good point. People can very easily create new wallets, right? It's basically cost nothing. We've seen criminal organizations operate anywhere from 10,000 to 50,000 wallets because it's literally free. Yes. And I think the FATF recognizes this, right? They recognize that, unhosted wallet is a way for people to circumvent the travel rule, right? Because now if you just move it into an unhosted wallet, then you move it into an exchange, basically, there's no way for the two VAFs to actually exchange this information. And so I think they're targeting unhosted wallet to close that gap. But again, it causes a big problem for the blockchain community, because this is not the way that crypto was designed, right? And if you actually think about it, putting yourself in the shoes of somebody who owns crypto, we have very good exchanges here in Singapore who really take a lot of effort in terms of their compliance and security. But at the same time, you have many exchanges out there in the world who constantly get hacked. So how do you address the concern of, citizens who say, I want to store my crypto myself, right? I don't trust it with any of these entities. But now you're saying if I use it in an unhosted wallet, I can never send it into a VASP. Then how does this, I think, is very detrimental to the ecosystem.
Okay, thanks. Let's move on. I think we still have some way to go. This point is, I call this the Kiasu part of the paper. Essentially, the FATF is saying that just make sure nothing falls through the cracks. So if you are not VASPs, then let's try to fit you under a financial instrument. So essentially, countries decide whether or not to treat this as conventional financial services or a crypto, or in Singapore terms, the DPT, right? In Singapore, for instance, I think that's the approach taken by the AMS already. So if there's a securities token, it's regulated under securities laws, the SFA. If it's a commodities token, if it's spot, then it's under the CTA. If it's commodity derivatives token, it's under the SFA. So it's already being done. I don't think it's particularly controversial. Okay, now this is interesting. So the FATF now talks about the definition of a virtual asset or a crypto. It says that it must be digital, and digital, they're technology agnostic, whether it's on the blockchain or not is technically not a requirement. And it's transferred or traded for payment or investment purposes. They made the view that there's something inherently valuable about the crypto in itself. I mean, one particular crypto that's very clear is Bitcoin, right? I mean, people hold on to it for investment purposes. And today is a good day if you're long on Bitcoins. And then it says that it's not merely a representation of securities. So technically, they're saying that securities are not cryptos, securities tokens are not. Fiat, this seems a little bit contradictory to the stable coins. And then, or other financial assets, digital art, other NFTs. But they dare not say that stablecoin is a virtual asset, but not so much a representation or declarative record of ownership. So in the case of an NFT, I mean, typically you want is a representation of ownership of an art piece or digital art piece, or Chai-Kit's hair, or Azman's pictures. Under this definition, it's unclear whether they are deemed to be a virtual asset. So are they or are they not? So that's the lack of clarity, because it seems to be a little bit contradictory. Any thoughts by the panel members on this? Azman, since you mentioned about your hair or your pictures. So.
Well, thank you very much, Nizam, for your vote of confidence about my hair. But nevertheless, I think the main issue that we need to address is the fact that I think it's clear from FATF perspective that they want to expand the definition as a catch-all kind of thing. I mean, basically, if it's not covered under the securities, commodities, or any of the other types of regulation, then they want to capture it as a virtual asset. So I think this is something goes back to what we discussed earlier, whether or not NFT in that regard can fall within this. I think looking at the interpretation, the key question here we need to assess is whether such an asset accrues in value and whether they are subjected to the transfer or in use as an investment. So if it fulfills that criteria, I think obviously under the definition of FATF, that it clearly is something that they want to be covered as a virtual asset. So in that example of NFT, if NFT is a work of art and it's obviously has certain value, and if somehow it's being traded or bought and sold in an exchange, I think that already fulfills some of those criteria, and it could fall technically within the definition of virtual assets, and therefore it be subject to the same travel rule requirement. But clearly, if you want to keep it, I think they've made enough provision in the FATF publication that if they want to exclude that from the definition of virtual assets, then they have to create a closed loop, and that it becomes non-transferable or non-exchangeable. Or therefore, then you cannot then obviously easily transfer or for value the asset. So I think I'm sorry, going about a roundabout way of trying to describe this, but what I think the FATF is trying to do is trying to capture the essence of what they possibly think needs to be covered, and they try to do it expensively. So
I
think it's something that we could run into issues down the road in terms of interpretation for sure.
I agree, and given NFT non-fungible tokens is getting a lot of attention, and therefore there is a need probably for the purpose of the response back to FATF is to perhaps clarify. But I agree with Asman. I think maybe an NFT on my hair is probably not going to worth any value because nobody's going to buy it. but if I'm very famous, maybe it's worth some money. And to Asman's point about whether I don't think the criteria, well, it's probably mentioned in passing, but the lack of an exchange a platform to trade it does not determine it to be not a virtual asset, because you can be I reckon NFT to be similar to in the real world like a immovable property. Like a real estate is a unique on its own, so it can be traded, but you don't have multiple similar buildings to be traded all at the same time. But you can actually trade it on a OTC fashion. So as long as there's value attendance to it, as long as the willing buyer and willing seller, then there is a quote unquote market, and therefore there is value attendance to it, and therefore it will fall under the VA definition for the purpose of it being a digital token. So I think, but clarification should be sought on NFT particularly because of the interest level it has gotten recently.
No, I think not just the interest level, but fundamentally, the question is there a money laundering risk? I think the answer has to be yes, because it's a money.
Well,
it's a value.
Yes,
transfer.
as long as there's value transfer,
Yeah.
there is that
Correct.
potential, because people launder money with aircraft, with yacht, with super yacht, with buildings, with real estate.
And
so
the difference is you don't have to it's very easy to transfer the ownership because you just transfer a token, right? And then you transfer the underlying assets that come with it. So.
And therefore, that's where the risk is even higher, right? Because if you want to transfer a building, then you go through quite a fair bit of a legal process. But an NFT probably is a lot easier and quicker.
Yeah, so there is a money laundering risk, but I think it's worth clarifying on the regulatory treatment of that.
And also on the purpose of treatment, right? Because if you're looking at this particular NFT, it doesn't really, in all natural of the words, right? It doesn't really constitute as a so-called payment token because it's not meant to be used as a currency or paid for something, but it's more like
FATF that looks at it holistically as virtual assets.
Okay. So in the case of Singapore, then it doesn't really kind of like fall under treatment as a DPT.
And then that's for MAS, that's MAS problem to determine whether NFT underlying where it falls under, that what Nizam is explaining earlier on.
Right.
No, this is not the MAS interpretation, right? So under the PSA, of course, there's a certain definition of payments, digital payments tokens, and fundamentally it has to be used by a cross-section of the public. It can be, it's fungible. It's the antithesis of non-fungible token. But until such time when the MAS changes the definition, technically you can argue NFTs are not caught under the PSA. But here is the FATF making what appears to be very confusing statements, whether or not NFTs are included. So I think Chakit raised a good point. I think we should follow up to ask what exactly is your position on NFTs,
right?
Whether they think they're caught under VAs or not. So let's move on.
But to throw the spanner in the works, I think we should also bring about the DeFi tokens as well into this mix, in terms of the clarity that we are seeking.
The thing is that for DeFi tokens, there could be a whole variety of them, right? There is no such thing as a DeFi token.
Sure.
It could be a payments token, it could be an NFT-like thing, it could be a governance token. So many permutations. I think you have to look at the underlying economic value of the token. But let's move on. I think we still have some way to go. This is on the definition of a VASPs. Essentially, we understand. Exchanges. If you transfer cryptos, including dApps, safekeeping, that's custodial wallets in Singapore terms. But the last one is potentially quite wide. Participation in financial services relating to an offer or sale of a crypto. For instance, if you book bill, you underwrite, or you market make a crypto, that's technically caught under VASP by the FATF measures. And then it says that it includes even things like brokerage, order book services, margin, algo trading. So if you have an algo trading platform on cryptocurrencies, you are a cryptocurrency, you are a VSP essentially, and ATMs obviously. For ICOs, the position by the FATF is so they don't have a strong view. They say that's up to countries to decide. So remember, in Singapore terms, we've got the PS Amendment Act. So it's been passed by Parliament, but it's not yet implemented. But the MAS has expanded the range of intermediaries to include custodial wallets, to include even brokering or facilitating transfer of cryptos. Yeah, and also if you remember the Omnibus Act, it also talks about giving financial advisory services on cryptos as one of the activities. But and that goes beyond what the FATF is saying here. So I'll just pause here. Any thoughts on the panel on this, the width of the definition of VASPs?
Yeah, this is extremely wide in terms of the interpretation. Essentially, anyone that has large holdings of or have issued any tokens or whatever, I think everyone is caught under this definition.
Okay. There's one qualifier, Branson, and I should mention it. The scope is that you are in the business of conducting certain activities. So there is a commercial basis. So that's one. And there's also a frequency. So a one-off transaction will technically not be a business. So you do it on behalf of another person or on another entity. So technically, if you have a large holding of BTCs like some of you might have, that doesn't necessarily make you a VASP.
Yeah.
I don't think there's any way, or we can try. They have made it quite clear, FATF, that the intention is to be expensive, right? Meaning broad in terms of the definition. So for what it's worth, if you walk like a duck, you quack like a duck, then you are a duck. That's the approach. So you get regulated like a duck, you know? So that's, I think, the intention. Now, to what extent each country want to limit this, want to be a little bit business friendly, they leave it to them, but they also pinpoint that they do not want regulatory arbitrage at the end of the day. So I don't think there's anything unclear about this. I think the intention is quite clear, lest they have to keep going back and forth the amending definition at the FATF level, which I don't think they want to do.
Okay, let's move on.
Sorry, a point back to it as well. I think maybe some clarification to the audience as well. I think probably some of them are, could be some people are puzzled. So I think under the category, there are folks that doesn't operate in an exchange, neither do they token issues, but they are actually kind of like marketers and resellers or distributors, you want to call them. Like for instance, token being issued, you have folks that distribute down to their downstreams, their supporters and all that. So I think this is something that would seem that they will be treated as a virtual asset provider as well, because since or rather broker, because they're the one that
yes.
Yeah. It would,
potentially, yes. Intermediary.
Mm-hmm. Correct. So this is a definitely good thing to clarify to the public, because I think that a lot of people are operating on that principle. They run forums or channels, right, TG channels where they distribute down, and because they're the one that probably resell for a slight margin or whatever, and that makes them very, very clear cut, really the need to be so-called regulated and licensed. Yeah.
Yes, remember this limb here, it talks about financial services relating to a sale of VAs, for instance, book building or underwriting. So I think it falls within one of these. So that's the expensive approach of the FATF.
So what about marketing and promotion? Would that be included as well?
Yes.
Within that definition?
Well, I think marketing is a little bit, you've got to distinguish between, let's say I'm a production house. I prepare videos for ChaiKit and its handsome face, or I prepare flyers for Upbit, or I do write-ups. I don't think that is, you're doing on behalf of somebody else. But if you are, I don't know, I think it's a very gray area where, let's say you are going about and you're distributing, let's say Kevin has a token issuance, I distribute flyers in a bus stop. please buy a cabin token.
Yeah, the reason I ask this question is because it becomes relevant if the VSP is required to be licensed in a particular country. If you're pushing your marketing and promotion in the particular jurisdiction, then you are deemed to be targeting that residents of those country, and potentially under this FATF rules, you might have to be applying for a license under that host country. So issues about marketing and promotion becomes, relevant in that regard as well.
Yeah, but that depends on the laws
very
of the
relevant.
country, particular country.
Yeah.
I mean,
Well, I mean,
sort of.
it's solicitation, right? So if
yes,
technically, if I go around and I act on behalf of an exchange in the another country and say, please sign up to this exchange.
Correct.
I will be offering exchange services in Singapore without a license. That would be a regulated activity of sort.
Yeah, I mean, I think it goes beyond that. I think the biggest one it will be definitely like token issuers, the ICOs, and the likes of DeFi, right? A lot of these companies they're not based in Singapore for obvious reasons. That they're based in somewhere, right? So then they have actually local agents over in Singapore, or their supporters or influencers that's helping them to sell the project or market the project in Singapore, right?
Yes.
So then I think this definition will deem these folks to be then the need to be regulated. If not, they're actually kind of like selling illegal, unregulated virtual assets as well, right? So I think that probably something that they need to understand.
Yeah, and depending on what they do, I think they could already be caught under the PS Amendment Act, right? Because the definitions have changed already. You move or you facilitate a crypto transaction. But let's just go on here. And this is relevant as well. It flows on from what we were discussing. So this is on the MAS's expensive view. I think there's a definite. This seems to be indirectly looking at the DeFi projects. So the point is, the FATF says that, look, if there is a crypto arrangement, there must be a VASP involved invariably. So if customers can access a financial service, some party must have provided that service. So this is Chakit's point on the duck analogy. But for decentralized or distributed services, the FATF says that countries must decide how to regulate this. And then, for the DeFi project, the suggestion is the country should look at who actually profits from the service. You can't just say it's there on the platform. I'm not running the platform, but who actually makes money from this? Who has established the platform? Who can change the rules? Who makes decision affecting the operations of the platform? Who came up with a product? Who controls and holds the data? And who can shut it down? So, these persons are likely to be the provider of the VASP service. That's what the FATF is saying here. And then on the point about using reliance on smart contracts or algos, the FATF is saying that, look, it doesn't mean that you are off the hook. You are still on the hook, even though you let an algo run, because somebody must have created the algo. And then this point also is quite relevant for DeFi projects, that you can launch a self-propelling infrastructure, like you can put a seed there and it grows. But fundamentally, even if you ask other people to co-build it, it's the same as you building them. So that is an important principle. I think this will impact, how people think about DeFi. I mean, of course, this is still at the FATF level. It hasn't cascaded down to individual regulations. But this is the proposal. But let's hear from people what they think about this. Any thoughts?
Yeah, I think in the 99-page document, it also mentions that
96.
96, yeah, or 96 or 99. Even if you have given up control, you are still deemed to be a VAS, or So I think it's very expensive in terms of the definition. So yeah, so I think so it is. I guess it's targeted, at DeFi exclusively for this, yeah. And they know that there are projects out there that they basically sell governance tokens or things like that will be controlled by others. But if effectively you are the person who sort of came up with the project, wrote the code and things like that, you're still not off the hook, so to speak. Yeah.
Yeah, these rules would clearly put a brake on the DeFi mania. I would probably use the word mania, because obviously it's been skyrocketing And in terms of having to comply with some of these AML, KYC rules, obviously is very, very tricky for them, given the automated nature of their business model. So it'll be very interesting how the DeFi, space respond to this. Are they going to obviously force some of them to go underground or some of them to comply? So I think it remains to be seen, but clearly it will have an impact on the DeFi space.
And to add to that is because a lot of the DeFi exchanges, right, the decentralized exchanges, right, they are not built in such a way to be able to handle KYC AML or even like onboarding of like, if individual information. Basically, anyone who has a wallet, even an unhosted one, directly can transfer to the liquidity pool and obviously start trading and all that. So definitely at all fronts, right, there's no way to verify, and that's how actually decentralized exchange actually operates, right? Anybody with the code, they set it up, people start trading, and that's it. They get a fee cut, and they don't even know who's actually behind that as well. So not sure even know how that's going to start kind of even tracking and kind of like doing who is actually doing. Like for instance, Uniswap, you only know who are the few guys, but do you know the full extent? We don't as well. So I think that's going to be a bit of difficulty to even.
Okay, true. I guess as I said before, this FATF guideline comes out, like say, even if I get finalized in the next little while, June or whatever, then it's going to cascade down. It's going to take a few years for it to become laws in respective country. There'll be some kind of a catch up that people will do. So I think the expensive view is in the right direction because it targets activity base, right? You can't send a machine, you can't send a smart contract to jail if something goes wrong. You need to get someone, you need to hang someone, right? One of Asman's words. It could be a group of people, it could be a company, and there must be somebody behind it somewhere, somehow in the world, right? Someone. And that's what they're trying to nail down. Without that, a lot of other problem, and not just AML, there's a lot of like, which I keep stressing, the conduct issue, the investor protection issue is all going to come up. You can't say, oh, it's not my problem, it's someone else's problem. So whose problem is it if somebody got hurt in the process? There is the greater responsibility that organizations like FATF and the regulator have to deal with. And not wait for it to happen, then they deal with it. That will be a little bit too late.
Okay, guys. Sorry, we really have to move on because there's quite a bit to go through. Sorry about that, Ian. Okay, just to get a sense from the audience, what do people think about the expensive approach on VASPs? Can the poll master please run it? So the options are absolutely necessary, or insufficient, or is it over-regulation?
Okay, 5, 4, 3, 2, 1. Let's close it.
Oh, interesting. Quite a split down the middle between people who think it's necessary and people who think it's over-regulating. Okay, thank you.
Nobody says zero, insufficient.
never overkill.
Maybe if I can vote, I'll say that.
No, you can vote already.
Yeah, you cannot. Not allowed.
Okay, a quick one. I think since we are stopping, right, I think there are some questions that the audience is asking. So the first one is the FATF recommendations in some way aren't encouraging regulators from specifying which cryptos or tokens that is licensed VASPs can deal with? For instance, those with anonymity enhanced features. So that's question number 1.
Yeah. I think it's very clear. It is very, very clear.
Yeah.
You are not supposed to deal with
yes.
Anonymity. And I think that's the approach. Don't forget that the PSA has taken as well, right? In terms of those that are listed in Singapore. So that's very clear.
Okay.
So it's consistent.
Yes.
Okay, so second question, this guy got a question on NFT. So technically some NFT platforms, they are actually not selling the digital file. Instead, they are getting a link pointing to the location of the digital file on the platform. So then doesn't that like kind of nullify the money laundering aspect, right? Or are the money launderers also getting kind of like being affected as well? So I think that's the question.
I'm not sure what the question is asking for, but fundamentally, okay, we're not sure whether NFTs is caught or not, but that's something we're clarifying with the MS, but with the FATF. But if they are in scope, then whether you send a link or whether you send the actual NFT, I think is substance over form.
Right.
But I really want to push on. Sorry.
Okay.
So this is the FATF question.
We are done. Yeah.
Sorry.
Next one. No more questions.
Okay. So these are the questions. There's some background noise. Can one of you switch off the mic if you're not talking? So this is the questions by the FATF. Their focus areas. I think we did cover most of it. But the way the FATF likes to ask the question is, do you think further guidance is needed on how the FATF standards apply to different business models? And then it asks whether it should further address the challenges in applying the definition of VASP to businesses which decentralize their operations across multiple parties. Next one, whether more guidance is necessary on behalf of another natural or legal person. Remember, this is conducting a business. What are the challenges in applying business-customer relationship in the VASP context? And the last part is on the expensive approach, whether it gives people enough guidance or not. I think we covered some of these, but happy to get any views from the panel on any of these issues. Anyone? Okay, so if anybody from the audience, you've got further inputs, you can always feel free to raise your comments to us. I know we're short for time and there's quite a bit to cover still. But I really want to move on. Now, this is on P2P transactions, as we discussed earlier on. So the principle is that VASPs, when there is a burden of due diligence on the part of VASPs. So on the part of regulators, the suggestion by the FATF is that there must be enhanced supervision of VASPs that enable unhosted wallet transactions. So if you're an exchange in Singapore, for instance, and you allow unhosted wallet transactions, technically the MAS can, or the FATF says the MAS should keep a closer look at you, right? And then this is what Ian mentioned earlier. So if they allow transactions to or from non-obliged entities, the FATF says don't give them the license. The FATF tells the MS don't license them, but there seems some leeway that unless they conduct some enhanced record keeping or enhanced due diligence. So the last point is guidance to VASPs in applying a risk-based approach to customers that engage in P2P transactions. Essentially, if you're an exchange, your customer does P2P transactions, you must keep a closer look on them. So if you can't risk bucket them as low risk, it must be a medium risk customer, for instance. So there are really certain levels of expectations on the regulators on the exchanges or the VASPs on P2P transactions. So we discussed some of these themes earlier, but can we get a reaction from maybe Branson and Azman, your thoughts on this from an exchange perspective?
Yeah, I think we covered most of it. I think basically, the same things, right? Essentially, I don't understand the part whereby if you allow unhosted wallet transactions, then you deny licensing. I think that's a little bit strict, to be honest. It's because most of the people, I mean, that's the whole premise of dealing with crypto, and this movement of not your keys, not your coins, right? And to the extent, if let's say everyone were to put, or to store their cryptos on the exchanges, does it mean that they're any safer, right? Than to check its point earlier. So all these things, I guess, are the questions. Yeah.
Azman, any thoughts?
I completely agree 100%. I think it's a bit of harsh to try and impose such a requirement on the VASPs, especially to monitor and police unhosted wallets, because I mean they already deem it. I mean clearly we define unhosted wallet to mean individuals and those companies that are not doing business in the virtual assets, right? meaning they are accepting it as goods and services. So typically these are instances where you're dealing with the normal aspect of using the cryptos themselves, whether be it for buying of goods and services, typically. So to impose this kind of requirement on the VASP to monitor and start to try and do enhanced due diligence, meaning putting limits, putting scrutiny, making additional reporting. I'm not sure whether it will achieve any of those objectives, because I think it's overly harsh to create, because the existing requirement is sufficient as it is, and we do not know.
I think the intention is also to make sure that all respective jurisdictions and countries are operating at the same level. You're leveling up the entire world, so they need to make sure that they are as prescriptive as possible, so that there's no leeway for people to try and maneuver and become a little bit friendlier.
I think no doubt that you should have a uniform standard, and we are all in favor of that we are playing from a level playing field.
Correct.
But that field we are talking about is to what extent and how restrictive your sidelines are. Do you need to put electric fence around it? So those are the things that I'm more concerned about.
I think barbed wire at the moment is good enough.
Okay, let's move on. Okay, we're really running out of time. Okay. So this is the second FATF questions. I think we discussed most of it. Essentially, they're asking what people think about P2P transactions, what options to identify how P2P transactions are being used, unhosted wallets, what other options are available to countries. So I think we can give some of the feedback that we've discussed. Okay, now on the travel rule, there's about 5 slides on this. So the travel rule is being implemented, but essentially the FATF has recommended a few more prescriptions to the travel rule. So just to recap, so this is the recommendation 16 on wire transfers. Traditionally, it applies to correspondent banks. Now it has been applied to crypto, applies to both domestic cross-border transfers, so long as there's a transfer. The obligation is both on the ordering institution, that's the institution that is transferring the cryptos, to obtain and remit originator and beneficiary info, and submit it to the beneficiary institution that receives the information. So along with the cryptos that you send, it doesn't have to be on the blockchain. You must send a message, and actually this is 10,000 Bitcoins from Chai-Kit to Branson. Because they've run very successful businesses. So
I wish I had that.
You must be optimistic. So these are some of the prescriptions. I don't think these bits are controversial. The name, account number, address, name of beneficiary, and account number. But we go on, and then it says that you must actually contain the originator's wallet address and public key. Okay, that I think goes beyond what was being discussed previously. You must also send the physical geographical address, the IC number or the passport number. And then for the beneficiary, he says you don't have to KYC, but you must screen for sanctions. So that seems to be an additional obligation as well. Because this is typically when you talk about who is your customer, it is the customer that has your exchange account, not the beneficiary. But now you must screen the beneficiary for sanction. And you must also have the beneficiary wallet address and public key being transmitted from the ordering to the beneficiary institution. So I'm going to pause here. This directly impacts the exchanges. So Azman, Branson, any thoughts?
Yeah, 2 things. I had the honor of sitting in some of the sessions with this international group that came up with the IVMS 101 messaging standard. So I think most of the information required are actually spelled out there, including what are the names. If the names are not in English, how do you transfer that and things like that. So I think most of it has been covered. But I think in terms of sharing of information, I think the concern is also how much information are you willing to share across different VAS, right? I mean, if I'm, let's say, XYZ Binance or something, or even Upbit or whatever, how willing are these exchanges willing to share or willingly share all this information with the other exchanges, right? Effectively, you are exposing all your customer data to the other exchange. So I think that's a concern here. Yeah. And also, of course, if you look at the granularity of this information, it's really a lot of information, and of course, the GDPR comes into play as well. Yeah.
Azman, your thoughts? You're on mute.
Oh, sorry. Okay. Yes, I agree that essentially the main issue here is the GDPR. Clearly, we are exchanging a lot of personal data across, and there must be some sort of legitimate. But that aside, I think it's something that is already, I think, consistent with what is expected under the guidelines of the Singapore PSA. So it's something that we are already working towards identifying. Perhaps things about the geographical address of the originator. Identifying the countries and doing more assessment on the particular countries. I mean, those are probably additional ones, but I think it's not that. I think it's not that controversial. Obviously, additional requirements and something that we can comply. I think this is something that I think we are okay with.
Okay, thank you. I'm going to move on. So again, on travel rule, there are some principles. One is that you must, transfer the information immediately and securely. So this is the part that ties in with the issue of data privacy laws. That you must make sure that there's a protection against unauthorized disclosure. So batch submission is fine. And when you send the messaging, it doesn't have to be on the blockchain. It can be through other electronic means. So it's technology agnostic. It says regulators should work with private sector. So if you have a platform, please talk to MAS and say that FATF asks you to talk to us. UEN number is optional. Whether you use the €100 threshold is up to the countries to decide. Sanction screening must be done. And this is the part that is again interesting for the exchanges. You must have a control framework, the FATF says. So for instance, until such time when you receive the information from the other exchange that sends a crypto to you, before you receive the information, you must have a way of putting this whole thing on ice until the information comes through. Only receive the cryptos once the information comes through. Okay, I think this is interesting, or it could be burdensome depending on which perspective you have. So let's hear from the exchange, whether this is okay or not.
Sorry, if I may go first, Branson. I think wallet screenings clearly would drive up some of the businesses of Ian and the likes, because obviously now it's made clear that you have to do that additional requirement to screen the wallets. But it's something that I think it's expected. Because clearly a lot of these wallet addresses are exposed to, AML and KYC.
It's not just screening as much, but the point is that you can't take in the cryptos yet until the information is received.
Yeah. So what I'm saying is, obviously, you will drive the business, and you have to work with those companies to implement the control framework. And we have in place such a screening process whereby you have to whitelist all of these wallets, so to make sure that the wallets are not tainted by any of the AML or high risk issues before you do the actual transfers. Yeah, I agree with that.
Okay,
that's something that we already resigned to it under the previous requirements already.
Branson?
Yeah, I think the control framework is something that right now, if I have a wallet address, I can send across, right, very easily without quote unquote the permission of the other receiving address. I think stopping it or putting it somewhere it itself needs the solution providers to come on board as well. But again, this is to me a little bit of a lot more work for us. For exchanges.
I agree with you. Operationally, you have to put in place that you will not execute the transaction until the KYC control framework is completed, essentially. Before you press that execute button.
Yeah, again, the devil's in the details, right? How do you implement this and to what extent? Yeah.
Okay, let's move on. I think we have some other slides. This is again on the travel rule. Now, this is on due diligence on your counterparty. So if you're exchange A, this is your due diligence on exchange B. So fundamentally, there's no need to do due diligence for every transfer unless there's a suspicion or a red flag. So that's a useful principle to have. The FATF says there are 3 phases. Firstly, decide whether the transfer is in fact with a debt counterparty exchange. That's 1. 2, identify who is the counterparty exchange. You might use the MAS website or any other reliable database to verify whether the exchange is okay or not. And then you go to phase 3, assess if the counterparty exchange is eligible. In other words, whether they are kosher or they're non-kosher. And then to guide the decision making, you need to consider things like AMLCFT compliance, data storage and security, profitability of business relationship. I don't know why the FATF got to essentially teach people how to stock eggs. I mean, that's a business decision in my view. But remember, we were talking earlier on about the Wolfsburg questionnaires, how you got to extend it to risk management. Now you have to consider data storage and security on the other exchange as well. And I think Chakit mentioned the sunrise issue. So for Singapore, we are probably ahead of the curve when it comes to implementing a lot of the FATF requirements, right? So I think we're one of the first few countries to expand the scope of DPT service providers, the PS Amendment Act, and even the travel rule. So the problem is, what if you work with an exchange in another country, let's say even within ASEAN, that might not have prescribed the travel rule requirement? So the FATF says, oh, you got to, that's your pasal. You got to either contractually provide for it, or you got to talk to your counterparty exchange as a business practice. So that is the issue. And then it says that in instances where you can't comply with the travel rule, you might implement measures like only allowing buy and sell within your community of customers within one exchange, etc., or you have enhanced monitoring. So the sunrise issue is particularly relevant in Singapore. Azman, I know that causes you some grief as well, so maybe you want to kick off on that.
Yeah, I'm also very curious about what they mean by suspicion before you initiate the DD on the particular VASP, right? As we know, okay, assuming what gives you grounds to suspect a VASP, meaning have they conducted something that is unusual? So I mean, I have those feedback in terms of what they deem before a DD is necessary. Okay, so that's one aspect. The second aspect is the different phases. I mean, the fact that when you have to do an assessment on a counterparty VASP, what the kind of standard that FATF is suggesting, I think it's a little bit over the top in terms of the requirements and the measures and the standards, making references to the Wolfsburg's questionnaire. So essentially, they need to work with the regulators themselves. And my view is that relying on the relevant service provider to be regulated or licensed under a particular country should be sufficient to rely upon the fact that such regulated carries the obligation to comply with AML and KYC and putting in place a comprehensive control framework. So in order for a third party to go and ask additional, I don't know the extent of the inquiry. It could be just a question and answer, making representation. Maybe that is sufficient. But if some countries apply the fact that you need to go into doing audit or extent of due diligence, so these are question marks that I'm concerned about the requirements that FATF might impose by having this sort of suggestions. And then finally, of course, in terms of the sunrise issues, I mean, we are actually working with another entity that have to comply with this travel rule and putting in place a separate measure. So of course, you can limit the number of transaction, VA transfers that you conduct in a very controlled fashion. So that's possible, and to limit that, so therefore you are reducing the risk. So yeah, so those are the considerations I would put in place for this question or this issue.
All right, I'm going to move on right now, and this is related to the point about who your counterparty is. So now the FATF is saying that even when you work, you send cryptos to an unhosted wallet, you must still abide by the travel rule. In other words, the exchange still has to send information to that unhosted wallet. Now, of course, unhosted wallets could be, an unhosted wallet there in the dark net, or it could be a wallet hosted by Tesla, because they're not a regulated financial institution, right? They're
Is
Nizam
Nizam frozen?
Froze for a while.
Yeah. I think it's frozen.
Battery run
Yeah.
out.
Yeah, maybe. I think he's stuck.
We just wait for a little while. Or he just dropped off his dialing.
Yeah.
Okay, he's back. Oh, thank goodness.
Sorry, I don't know what happened. Branson, your thoughts on that before I put back the screen? On unhosted wallets.
Hosted wallets, right? I mean, I mentioned earlier, which is, I think at the end of the day, the unhosted wallets, it can be two forms, right? What you said, right? It could be Tesla, it could be even your own co-wallet. To me, it's a bit onerous to say that all these unhosted wallets need to be scrutinized and you need to collect information. So I think, to me, I would voice my concern on this, because at the end of the day, I would prefer that while the travel rule extends to the different VARs transacting with each other, I think that's doable to a certain extent, of course with more compliance costs and whatnot, but to actually include unhosted wallet, I think that's a little bit overextension on FATF's part. Yeah, that's my view. Yeah.
Okay, sorry, I think we should push on. Next is on the tech platforms that the exchanges can use. Essentially, some guidance is given. I don't think it's particularly controversial. Essentially, when you rely on a travel rule platform, it should enable you to handle large volume of transactions. Security of data is very important. How you protect the information, and also there should be some communication means between VASPs to talk to each other. So if you're developing this platform, probably worth having a look at this. So these are the FATF questions. They asked any issues on the travel rule. I think we can feedback some of the things that we discussed. And then this is the issue on stablecoins or peer-to-peer transactions. Again, so you have further thoughts or information, please feel free to email us. I think Kevin will give the email address after this session. Now, next, I just want to quickly go through the MAS's guidance on their AML and CFT expectation for crypto service providers or DPT service providers, which is hot off the press. So a lot of it actually is not too controversial. So this bit they talk about, PSNO2. Everybody must know PSNO2. You must read every night before you go to sleep, and the guidelines as well. So this is interestingly, the MES refers back to the FATF standards. So again, the main point is whatever we discuss on the FATF guidance is extremely relevant for you guys here in Singapore, because invariably the MES is going to adapt or adopt most of it. So this is the MES's chart on how they regulate. Nothing really that we don't know. So just the point on surveillance is interesting though. It says that the MES will detect and deter unlicensed DPT services. I think that enforcement action has been taking place, and they actually will leverage on data and blockchain analytics to identify higher risk entities. So exchanges, just bear this in mind. The MES it promised that it will look at this. So just bear that in mind. This chart really says that the MES is aligning its DPT service notice because of FATF requirements, and they're introducing two new activities, custodial wallets and facilitating transmission of DPT services under the PS Amendment Act. Again, nothing that we don't know. This is an overview of the key requirements of PSNO2, again, nothing that we don't know. If you're an exchange, you probably should comply with every part of it. Again, this is nothing that we don't know on the MES's expectations. EDD for higher PEP rates, against this is 101. Now, this is interesting. In relation to value transfers, the MES essentially has already said that where you deal with unhosted wallets or unregulated VASPs, you must put in place enhanced risk mitigation measures. So it's already there that the MES has this expectation that you must do some form of due diligence on unhosted wallets or unregulated exchanges. So that's interesting. The next point is, again, similar to what the FATF has mentioned in relation to the travel rule, that if you can't comply with the travel rule, or you need more time to implement the travel rule, in the meantime, you can have a closed loop, meaning that you only allow transactions within your customer base. So the buyer and the seller are both your customers within the exchange. So that might be a practical solution for if you can't comply with the travel rule yet. But we do know from the MES informally that they have put on hold the implementation of travel rule, probably because of the FATF new proposals. So we'll wait for further announcement from the MES on this. Next, this is the expectation that identity service providers should conduct regular reviews of your AML and CFT controls. So your policies and procedures, it's not just clear but sufficiently detailed, but you need to review them on a regular basis. Your EWRA, you would have submitted this in your license application. Remember, it has to be continuously reviewed, and it has to be escalated to the board. For compliance arrangements, we know that when it comes to license applications and you're a DPT service provider, the MES is going to ask you very tough questions on your compliance arrangement, your resourcing. They will ask for CVs of your compliance officer, whether they are sufficiently experienced or senior, etc., etc. Okay, again, this point is on the last slide. I think we circled the part that says the obvious, that MES's AMLCFT requirements are aligned with the revised FATF standards for VA and VASPs. So, so pay close attention. Sorry, I know we took, a few minutes beyond 5, but can we end up with a poll question here? Do you think the changes will be positive for Singapore? Last poll for the day. I don't think there are any more slides after this. All positive, negative, largely positive, but concerned about certain provisions. So your thoughts on this?
Okay, 5, 4, 3, 2, 1. Okay, let's close it and share.
Okay, largely positive, but concerned about certain provisions. I think that's probably a fair reflection. So I'm going to hand you back to Kevin, but remember, if you have any lingering thoughts, you sleep tonight and you still think about this presentation, please drop us an email. Kevin, I think
yes,
maybe you want to share.
Really have that. So thank you.
Sorry, just want to check, guys. I mean, we are obviously going to collate the responses, right? When are we expected to send it back for the interest of those people who want to submit their recommendation and suggestions?
I think based on the guidelines, if I'm not wrong, I mean, FATF is looking at somewhere in June and all that, but I think we want to do it earlier rather than be a latecomer. So I think we will be collecting until probably like the 20th of April. Think about it. I mean, it's not going to rush any quick comments. Think about it, then send to us by the 20th of April. We will compile everything and do a very professional submission to FATF so that we will all be represented, not just BAS as in like the whole industry. So let us help you.
So the email address is at hellosingaporeblockchain.org.
Correct. So it's all, everyone can look to the main chat group. I have seen also some comments on the main chat group. We'll be compiling this as well as part of the responses as well, if let's say it fits into the narrative. But yes, any question, please forward to hello@singaporeblockchain.org. Thank you very much.
Just double check on the,
please. hang on. Kevin, the closing date actually is 20th of April.
Yeah, that's what I said. Just
Oh,
double check on
sorry.
the closing date because it's not June.
Oh, okay,
No,
so
so-
20th is closing date. So I think definitely probably by
No, let's give people a week. So if you
Yeah.
give us back your comments by the 7th of April,
Correct.
I think, and then we will do the drafting
Yeah.
to respond back as an industry body back to the FATF.
So by
Okay.
the end of next week, all the responses should come in. Yeah.
Okay, Ken, I'll just
Yeah.
type that over the chat so everyone understand that as well.
Right.
And I think just a closing thing to everyone out there, as well as like, kind of sharing with your community as well, is I think with the strengthening of AML KYC, I think MAS kind of make it very clear that they will start enforcement very soon. There's a lot of, I think also indicated in the slides by MAS, that there's a lot of so-called unlicensed, unregulated entities, both exchanges as well as ICO issuers and all that, that's operating in Singapore without under a license or have not applied for the exemption. So these are all going on. So be very careful of who you actually work with, because you will be implicated in the enforcement activities that's coming up from both MS and CAD. So that's probably the final thought. As well as those who are actually operating as brokers, this is probably a final warning from MS before the enforcement starts. Yeah. So with that in mind, thank you very much for attending, and sorry that we overran, but this is a very important topic to go through. So I think that we covered most of it.
Sorry,
Okay.
there's a request for the slides to be shared with the people.
Yeah, we can just drop the Blockchain Association email. I think we're happy to share that. This is part of our public outreach program.
As well as like we have already recorded, and then we will be sharing the video on YouTube, the BS YouTube channel. Yep.
Yep. Okay.
Great.
Thank you very much, everybody.
Thank you.
Thank you.
Stay safe.
Adios.
Thank you. Take care.
Bye-bye.